born-again believer Christian, tongue-talking and everything. And I believe that God, since the foundation of the world, has used shapes, has used numbers, and has used different things that are unseen to be able to reveal a picture. So when he told Noah to build an ark, he gave him specific dimensions as to how the ark should be built. When the 12 tribes of Israel gathered together, they were told to assemble in a shape, which ended up being a cross if you look from the sky high. So God is particular about shapes, but what the enemy has done everything in the opposite realm. So the triangle, which you now see as demonic, was once a triangle that represented the Trinity. You know, the square that represents four sides equal in structure has been something that Satan has tried to use to break that down. And so what I'm going to try and teach you here is that just like in the church, how there are different skill levels and different spiritual levels, I'm going to break this down as simple as possible. We're not going to be all technical. I'm not going to try and use terms that you've already heard before, because I believe that if you can't explain Forex to your grandmother, then you should not even be explaining it at all. It should be broken down so the average person can understand in a way that is preached and is spoken to them. Jesus never used technical analysis to be able to get the message across that the kingdom of heaven was near. He used simple languages. When he was talking to fishermen, he was talking about fish. When he was talking to farmers, he was talking about farming. So I believe we can use everyday language to be able to get across the message. So if you're in the chat box, I want you to type in a 111 to remind me that I only have 1 hour to speak. I know I'm African by blood, and Africans tend to talk a lot. So give me a 111 to remind me that I have 1 hour. If you are viewing from the Abuja Trade House and I can see you guys, everyone stick one finger up and point it towards the screen, just one finger, to remind me, Papa Smurf, that I only have 1 hour to get everything across. God bless you guys. I'm going to share my screen and we're going to get into it. If you're live and I can see you, make some noise for me. Give me a hallelujah and amen or a clap to encourage you. Because to be able to speak and be on the platform of 70,000 people is not easy. All right. So we're going to talk about market geometry. Thank you. Thank you very much. Market geometry is something very simple, and I want to break down two simple concepts that traders often use, but they talk about too much, and that is the aspect of impulse and correction. Okay, I'm going to type it on my screen as I go so you can copy the notes as well. If the color isn't too good, I am sorry. I can change it to white if you please, but I know that yellow is something that is that sticks out as well. So we have impulse and we have correction. Now, it's important that we break down these two concepts of what they are, because they're going to help determine how you trade in the market, okay? Now, impulse, simple terms, impulse is a movement in the market that goes in a continuous direction without any form of pullback, any form of reversal, or any form of momentum shifting. In simpler terms, it's just going straight one direction, okay? Just straight. Now, a correction is a move that is opposite to where the impulse is going, but it's not clear cut, okay? It is very choppy. It is very ugly, okay? So how I'm going to be able to explain this is as simple as this. You see over here, we're looking at the Australian dollar and the Japanese yen. It's one of my favorite pairs. And you're going to see over here that you see one continuous ride of momentum going to the upside, okay? We can even use this example here. You see that there are three strong candles going to the upside, all right? And then what you see that's happening out underneath is that you see that there is a move that's going in the opposite direction of where this previous move took place. Type in a Y or a yes in the chat box if you can see that, and clap if you can understand that that's an impulse and that's a correction. I want to be able to know that everyone understands what I am talking about, because as I go on, we can't backtrack, okay? So just give me a wave if you can see the difference between an impulse and a correction, and type in a Y or a yes in the chat box if you can see the difference between the two. All right, it's going to be hard because we have so many people, so I want to be able to explain this as best as possible. I'll say it one more time for the benefit of those who want another explanation. An impulse move is a move in the direction of one same direction. You see this example here before I put the green line on top of it. You see one move, two move, three moves. It's all going in the same direction. You see the corrective move is reversing back, but the corrective move is not as clear, not as pretty, not as defined as what the impulse move demonstrated. Okay. Now, once you're able to identify and know how this starts and how this ends, you can then predict where price could potentially go in the future. This is what I mean. Everyone can see that this impulse move ended where I drew my rectangle, correct? Wave to me or type a Y or a yes if you can understand that the corrective move ended where I drew my rectangle. If you can wave, I need to see if people understand this, okay? Now, what I'm going to do is show you that you can use, without using any fancy indicator, any web analyzer, which I love, any harmonic scanner, which I also love, any signals, which I love. But what I'm trying to do is not allow you to be dependent on signals or dependent on products, because sometimes 9 times out of 10, you need your laptop or your computer to be able to activate the harmonic scanner. What happens if you're at the marketplace? What happens if you're in the toilet? What happens if you've just finished church? What happens if you've just finished work? Are you going to now say, I need to get data for my laptop or my computer to be able to trade? No. I want to break this down so when you see patterns like this in the market, you can then do the same thing. Now, you've seen that this impulse move has taken place and then there's a reversal. Now, what you can do is that once you get the measurement of the impulse move and then you put it where the rectangle is at the end of the correction, if I zoom in and I scroll up, you will see that this move, the same distance, can be applied to the next move at the top here. Type in a Y or yes, you can see that price pretty much ended at the end of this second measurement. This is something so simple that you can see. All you need to be able to identify is what is impulse or what is correction. If you want to create another name for it, that's okay for you, as long as you're able to understand what is happening in the market. Now, I'm going to do a couple more examples so you can see that there are short impulse moves and short corrective moves, and there are big impulse moves and there are big corrective moves. Then I'm going to give you 3 tips to identify when a corrective move is going to end so you can get the maximum amount of potential for a trade. Anywhere between 20, 50, 100. If you are on my swipe trade and you got in on GBP, NZ, you'll know that we're up 200 pips now. Okay, because I use these simple tools. What people need to understand is moving averages are fine, yes. RSI is good, stochastic is always good, but there's a thing called lagging indicators. The indicator that is the most active are your eyes and your brain. They're able to see where the market is going before the moving average can calculate where the market is going. You see, a moving average, by the time a moving average crosses over, you would have missed at least 50% of this move. Okay, and so if you see that your RSI is overbought or your moving average has crossed over and you come to this point, what happens if price reverses against you and then goes back to the upside? What happens then? You will lose your trade. Why? Because your indicator told you. Now it's your turn to tell the indicator what to do. Alrighty, so we're going to go look at more examples, and you're going to see that this is happening all throughout our charts. It's a very powerful tool to be able to identify when price starts and when price ends. Again, impulse and correction is the only thing that we want to look at in our basic geometry series. And if you love what you see, then we can tee up again to know more about how we can trade geometry. Now you can see this move that's happened over here. You see that there's a lot of momentum going in one direction, starting at the bottom here and ending at the top here. Then you can see that the corrective move, even though it was choppy, it ended at this point over here. So when I copy the distance between the start of the impulse move to the end of the impulse move, and then I move it over to the end of the corrective move, look what happens here. You are able to pretty much get into the market exactly where the corrective move ends and look at where you can take your profit. If I put a horizontal line there, you'll be able to see that it pretty much started getting more choppy towards the end. So you'll be able to get in and get out risk-free, because the second a correction finishes, guess what comes after the correction? Type in the chat box if you know what comes after the correction, or yell out to me if you're in the trade house if you know what comes after the correction. If there's impulse, there's correction. What's next? Impulse.
Impulse.
Those are the only two things that you need to worry about. Trading, it is simple, but we as humans like to complicate things. All right? Impulse, correction, impulse. You need to ask yourself some few questions. Is this current move going in a straight direction? Is there any pullback? If the answer is yes, then you're in an impulse. Now, if the market is choppy and you don't know where it's going, sometimes it's going up and sometimes it's going down, you may be in a correction. Your job is not to guess what the market is doing. Your job is to wait for the market to show you what it's doing, and then you make your calculations based on that. Now, let me show you something on a bigger time frame, because we were able to catch this smaller move. And by small, I only mean that this one was maybe 50 or 60 pips going to the upside, and this was another 50 or 60 pips. Well done. I'm not a 50 or 60 pip type of person. I see people on the web analyzer group saying, hey, I caught 3 pips, I'm so happy. That is great. But that is not practical. Why? Because you're going to be staring at your screen all day, all night, trying to get the right moves, all for 3 pips. We're not living for 3 pips. We're children of God. We're living in prosperity. We want to be in the time where we're saying, yes, I caught 30 pips today, 50 pips today, 100 pips today. And this is something interesting that has happened. And I'll show you an impulse and correction on a greater scale. Now, you can see over here that there was a corrective move that took place over here, okay? Right over here, you saw that there was a corrective move. Now, when that corrective move finished, you saw that there was one sharp move from this point to this point going down. Yes? Nod your head, wave at me, or type a Y or a yes in the chat box if you can clearly see that that last example that I highlighted was a clear impulse move. Now, what you see over here is that you see market retracing back. And you see the difference between this impulse move and this corrective move. I didn't say a corrective move had to be special. All I said is that it reverses against the impulse move, and the way it reverses is very choppy. You see that there's choppiness over here, it comes up and it's choppiness again, and then it starts to come down. Now, let me show you something. You see over here that the market halts, the market pauses, and we're going to be using this area as our case study to get 3 simple rules to be able to know that you're getting into the right move in the right market. Now, when you finish during that impulse move, you see the corrective move has finished, and then you see the impulse move take off, all right? Now, when an impulse move takes off, it takes off outside of the corrective structure, not inside. This rectangle over here is inside the corrective structure. This move that takes place underneath is an impulse move. Now, this might look ugly to you. This might look like it doesn't make sense. But what happens when you draw it properly and you put your horizontal line tool right at the end of the impulse move, look what happens here. If you zoom in, you see that your TP would have hit by the wick. You would have seen that it hit by the stick. If you were able to get this move, you would have not only caught the first move, which was from 84 all the way down to 81, a 300 pip move, you would have caught this entire 300 pip move as well. Alrighty? Now, the question we have to ask ourselves is, how do we know that the corrective structure is over? I want everyone to write this down. How do we know the corrective structure is over? How do we know the corrective structure is over? Now, you're going to see 3 distinct things that I call the Smurf and swerve. When you see those 3 things, there's a high probability that there's going to be action that takes place in that move. Now, if I delete this, we're going to go from scratch, and I'm going to show you how to be able to identify it. I told you already that this area here was going to be our case study. You see over here, there was stagnancy that was happening over here. Now, we are in a downtrend, as you can see. Now, if you haven't studied trends, then I advise you to go into your IML Academy to study trends. But what you've seen over here is that market has formed higher highs and higher lows and et cetera, et cetera. Then we've come to form this point. There is no point buying against a downtrend. And that is one big mistake that a lot of rookie traders make. They want to try and catch every move. Our job is not to catch every move. We want to catch the right move. Now, going in, we're going to see that this corrective structure is stalling. The first thing you want to identify in the corrective structure is that there must be, in a downtrend, a significant high. What does that mean? That in this last move that's happened over here, going down, there has been no high in this corrective structure than up here, other than this move, because this was the previous impulse move. When you look at that, give me a wave if that makes sense, or yell at the camera to say, no, I've lost you. It doesn't make sense. Sorry?
You've lost me.
I've lost you. Okay, let's get our GPS. Now, going up here, you've seen that in this corrective structure, there has been no significant high. There's been highs in the past because it was part of a downtrend, but in a corrective structure, see, we're looking at this move here. Where is our highest point? You would say that this is the highest point, right?
Yeah.
Everyone can say that this is the highest point. Now, what you want to do is when you see that there's the highest point, you want to make sure that there are two low points on either side. So you can see over here that this was its first high. Then you see that there was a high that broke on top. And then when it came down, there was a low. When you see this low, that is when you're going to enter into your sell trade, whether you want to do a sell stop or a sell by execution and ride it all the way down. How do we ride it all the way down? Well, I've already showed you that when you measure your impulse move, and as the saying says, what happens once will always happen again. You see this move, we've already measured it. You see that there's been 1 point, 2 points, third point, and it came back down. This is what you want to name it. You want to name this the high. Why? Because this was the first point in our corrective structure that market went higher than it ought to. So you're going to name that the high. H-I-G-H. Don't think of any other high, otherwise I'll suspect you. You guys can laugh, it's okay. Now, in this move, what traders get fooled with is sometimes they think that, okay, well, market has come to a point where it's very, very high, so I'm going to sell here, right? This is going to make sense because some of you who have traded have gone through this experience, and now you're going to see why every time that happens, you get stopped out. When you enter a sell in this position, because you know it's a downtrend, you know it's coming down, what the market makers do, and market makers are people behind the scenes that will deliberately trade against you for you to lose your money. What they will do is they will make sure price will come down to get you excited, and then they're going to push the price up because they know that stop loss will be just above the high. They know this. Everyone who trades will say, well, I'm just going to put my stop very tight because there has been no other place in my structure. If we zoom across like this, sorry, I'll show you. If we zoom across like this and you see, oh, the last high was here, in that case, I'm going to put my stop loss just up here so the markets can't touch us. Yeah? This is what they want you to see. You see how markets came down, it came up to retest structure, and then it came down. So when you see that there's another high, people are going to think, oh, it's a double top. Let me sell. A double top simply means that price has come to a form of resistance, okay? Or it's hit the ceiling, or it's hit the top. And what price has done, it has been rejected, okay? Price has come up, it's been rejected, comes back down. Then it comes up, then it comes back down. Why is it called a double top? Because it hit the top twice. Okay? If it does it a third time, what would you call it? Triple top. Exactly right. Very good. Very good. So now that you see that, you're going to see that if you're looking at this structure, you're going to think, okay, this was the highest point, so this must be a double top. And the market makers use this pattern a lot to stop people out. And then what happens? Price starts going down. Then you're saying, hey, price is going down. I'm going to get 100 pips today. Then you start adding more positions, standard lot, 2 standards. You're going to put everything into it because you know you're going to catch the move. And then look what they do. Okay, wait, let me get off this pen tool. Look what they do. They deliberately break that high to stop you out. It's psychology that we're dealing with here. They'll deliberately break this high. See how this was the last high. They broke the high. They formed a new high, came back down to form a first low. When you're in the market, what you want to do is that you never want to sell off a high. You want to sell off the first low. Never sell off the high. Wait till market comes lower before you sell. Let me say that again. Never sell off the first high. Wait for market to go down and form a lower point in your chart before you sell. Because if you get in on the first high, they're going to do this pattern over and over again. And here I am, I'm going to prove it to you. We zoom out, we're going to find corrective structures only. Only corrective structures. You see here, you see this point in the market. You see that price came to a high point. You see how there was an impulse. Okay, market has stopped. It's U-turning now. You see how price has formed a high and then it started going down. So you're excited and you start selling more. And then look what they do. Bang, they break the high. Then they form this small low that we look for before going down. Is that becoming clearer? Yeah. Let's do it. Let's do some more.
Yes.
Let's do some more. Oh, this is present day. Even this one. This one is good. Price came up. Okay, see how price is going up, 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 up. And then there's a high that is here. And then you start selling. You see how the initial sell starts so aggressive, starts going down so aggressive. And then what they do is they go up. They form the high. They come down and look what we're looking for. A high that is lower than the previous high. And whenever that happens, look. How many have we done? We've done 3. And every single time that we've done those 3, there has been a strong move after this 3rd one. So you wait for the first one to take place because you know that you're smarter now. You wait for it to form the higher high because you're smarter now. And then you wait for it to form its 3rd element. And this is what we call the confirmation dip. It's confirming that you're seeing what you're seeing. If you do not get this, if you do not see this, do not trade it. Why? Because they might continue going up and up and up and up. You want to make sure that this high over here, it is lower than this point over here. Once that happens, you can enter into the market. Does that make sense? Is that clearer?
Yeah.
We can do
Very clear.
plenty more examples, okay? Plenty more examples. You see over here, if you've been with me on this trade on GBP NZ, when I woke up Monday morning, I was like, sheesh, I missed the first move, okay? And look what happened over here. Missed the first move. It corrected. After the correction, I was like, price will go up here. This is where I see price going. But I needed to wait for a confirmation. So what did I do? I waited for this time, because we're going up, we're looking for a low. So this was the initial low that I saw. I was like, okay, let me wait for them to push the price up and then come down to break my low. Look at what happened here. What did price do? Price pushed up, it came back down, and now this broke this previous structure. So it formed a lower point. And then you see that price came back up, came down to form a confirmation, which is higher than this point over here. Then you enter. That is how we were able to bank 200 pips in a day. It's just going and going and going and going and going. It doesn't want to stop. Now it's stopping to give people hope. And look what it's going to do. After it does that, we're going to see something like this, and it's going to go up. Okay. Now, if I go through my chart, I'm going to give you a shocking revelation that you will take with you every time you see this. This move happens on Wednesday or Thursday. I hope I got your attention with that. This move happens on a Wednesday or a Thursday. Sometimes a Tuesday, but it's definitely Wednesday or Thursday. If I'm going to go back, I'm going to plot my chart. So I'm going to try and find a couple more of these, and we're going to see where those moves take place. Okay, let's go to, someone give me a pair that they want analyzed. You can use this as your signal.
What pair do you want him to analyze? Pounds USD.
Euro
NZD.
Sorry?
Euro NZD.
Euro NZD. This is something I call with my own group, and I think we're up 400 pips from this. Okay, so we're gonna analyze Euro NZD. Okay, if you're trying to sell the NZD today, not knowing that there was a bank holiday, then that is why you are losing. We caught the move. If it will delete. Okay, we caught the move from down here. This is where we bought. And this is where we are now. Okay, so what do we want to identify? Okay, look, you see that there's a move that's taken place over here, and you found there was a low. Okay, now remember, you have to wait for the higher point to be able to confirm that you're going to be in the market. So the question then begs that if price comes lower and then that low point has another low point, which one do you take? You take the point that has a high that is after it. So for example, this one, you see that price came down. You see that price came back up. It came back down. But you see that this down is lower than this down. So now you're going to remove this rectangle and put this rectangle at this point. Does that make sense? Nod or give me a Y or a yes if that makes sense. Excellent. Now,
yes, it does.
You see that it comes back up and then it forms another low. Now, what you're waiting for is that after that low, you want to wait for a dip in the market that is higher than this point. And so you see that it happened over here. When that happened, that's where we entered the buy. And we ride and ride and we keep moving our stop up and up and up and up for that to take place. It will happen all the time, every time you see it. Now, I'm going to go through the chart. Like I said, I'm going to say that this mostly happens on a Wednesday. This structure forms on a Wednesday or a Thursday, and then you can trade it after you find that confirmation dip. Okay, so we're going to go through here. We see that there is 1, 2, 3. Alrighty, we've seen that. Now, you've seen over here 1, 2, 3. Do we see that?
Yeah.
You
Yes.
see 1, 2, and this one was a bit more ugly. So you can see it. 3. You see that there's a high point over here. You see it? And it came back down. It wicked down and it came back up. 2, 3. 1, 2, 3. You guys get the point, yeah? I don't have to go on for days. Now, what I want someone to do is go through their Google Calendar or something and give me the date of last Wednesday. I think if it's the 25th today, would it be the 18th? Good. All right. 18th. So let's see where the 18th was. So the 18th happened here. So all of this had formed even before the 18th, but this is Wednesday. Okay. What was the date before that? The Wednesday before that, 11th?
17.
Wednesday before then.
11.
11.
11.
Okay, good. 11th. Okay. And before that, 4th, yeah?
Fourth.
It will be 4th.
And before that,
That will be 27.
26.
26 or 27?
Thank you.
Okay.
28.
All right. And before that, are
19.
you guys sure that these are all Wednesdays?
21.
Yes.
21. Okay. And then before that was 14th
20. 21.
And 7.
Yeah.
and 7.
14.
All right. I don't know what's happening here or who called what, but you can see that our blue line has either hit or just passed a point where this structure took place. Remember, I said that this structure will start forming or complete forming on a Wednesday or a Thursday. So you can see that this structure started forming on a Wednesday. So you know that when this is the lowest point, you're going to wait for a lower point. Then on Thursday into Friday, you want to see if there was a dip that happens in the market. You see over here, previous Wednesday, you see that this was the confirmation dip. So you can sell and write it all the way down. All right. Over here, Wednesday as well, confirmation dip. Wednesday over here, confirmation dip. If you keep going forward, it's either the low or the confirmation dip. If I tell you that nothing happens by chance, you say that that is a biblical quote. But nothing does happen by chance. Everything fits where it's supposed to fit. And if I had more time, I'll show you how shapes can be used to be able to determine where you can place anchor points in your market. Now, what I want you to do is that after this call, this is your homework. All you need to do is go through 5 charts, and in those 5 charts, find this pattern 5 times. Any time frame you want. I want this to be ingrained into your head, that this is something powerful that will help you not question your moves in the market. And trust me, when you do this, 9 times out of 10, you're going to be trading opposite of the majority. Most of my trades go opposite of what people are thinking, so it doesn't make sense to them. But this is my formula, and I'm giving it to you guys for free. Why? Because I know when I come to Nigeria, you guys are going to buy me plenty of clothes. So this is one final thing. Okay, that is your homework, to make sure that you go through 5 charts. It can be anything you want, okay? But make sure you can identify that pattern. If you can do it on your phone, it will be more powerful because you have your phone on your person more than you have your laptop. All right, so make sure that you have that with you. Now, the last thing I want to be able to show you is there's a thing called swings. Okay, it's a technical term, but I'll break it down to you. Every time you see something happening in the market, you find that the market has this thing called swings. What they are is just a point where there's a low, it goes to a high, then a high finds a low, then a low finds a high, high finds a low. Okay, so you know, this is not a harmonic thing. This is something I want to teach you that's going to shock your mind. What I'm going to do is this. I'm going to show you this last swing. Oh, sorry. Undo. Take this off. Take this off. See this last swing? See how there's this point which was very, very high? Okay. And we're going to get our rectangle and we're going to cover it to the very, very low. How many of you guys can see that I've covered the highest point to the lowest point? All right, type in a Y or a yes in the chat box, or just wave to me if you can see that we've been able to cover the last major swing move. Now, what you're going to do is something very, very simple. And in our next lesson, which we will discuss on another time, maybe in a few weeks, I'm going to break this down on how you can cheat the market to be able to know where the market is going to go in the future. or why price reverses at certain places, even though you drew support and resistance somewhere else. Okay? Now, what you see hasn't been taught before. So you can go on Google and YouTube, you will not find this. All right? So what I have done is that I've made sure that this trend line goes from corner to corner. Okay? One corner. Then you'll do the same thing on the other side.
That's Ghanaian
Just
talk.
because I was born here doesn't mean I don't know, huh? All right. And you'll see that there's an X. All right. There's an X that meets in the middle point of your rectangle. Now, here's the powerful thing that you're going to do. You'll find that you'll get your horizontal line and you'll put the horizontal line right in the middle of the X. All right. Then you'll get your horizontal line and you'll put it at the top of your rectangle and at the bottom of your rectangle. And now what you have done is that you've created zones inside your structure. Isn't it very interesting, the 3 points that we've been able to highlight, significant things happen in the market. You see that price has respected structure here. You see that price broke structure, respected it, and then broke it again. You see that price is floating with this middle structure. You see over here as well that price came through and retested structure. You see over here that price came through, consolidated, then broke through structure. This middle line must be important. If we go back even 3 years, these 3 lines will be so important that price will respect those points. All right, you see all the way through. Look, I couldn't make this up if I tried. Euro NZ, yeah. Look at this, bang. Price is respecting this structure. Now, what you want to do is that you want to make sure that you're identifying these pivot points in structure, because something significant happens in the market when you identify those structures. Now, you don't have to be a guru in support and resistance or go to school for support and resistance. Everyone knows support and resistance, but no one knows where to draw it properly. I've shown you, you can use major swings to be able to do that for you. Now, the other thing you can do is that you can get the distance from this point and then put that distance below, like so. And what have you done? You've actually created another zone. So you get your horizontal line, you put it there, bang. And then you can keep doing that all the way up and all the way down. Now, the reason why I'm highlighting it like this is because we've seen that Euro NZD is on a massive bull run at the moment. And I'm assuming people are asking about this pair because they kept selling and they don't know why it keeps going up. Yeah? Because their indicator told them so. The RSI was overbought, which I don't believe in. You know, their moving average crossed over too quickly. And so they're wondering why there must be a lot of juju in this pair because this pair isn't going down. Right? So we've been able to see that price has respected these points. And you've seen recently, if you've zoomed in, price came to test this point that we drew. It came down temporarily and then broke through structure. Now, when your resistance is broken, what does that resistance become?
Support.
Support. Exactly. This is basic fundamentals. Now, just seeing what has happened here, we are going to see, okay, whether you want to call me Papa Smurf or whether you want to call me Major Prophet, this is what you're going to see. You're going to see a retest of structure. Okay, now depending on how the New Zealand news goes, it's going to go one of 2 ways. It's going to complete this structure like so. Or if the New Zealand news is good, it's going to come down and test this previous structure that we drew over here. Now we're inclined to see that this bull run has been so strong, it has scared people. So what you want to do is you want to make sure you draw your trend line like so. We'll make it a different color so you can distinguish which is which. We'll make it pink. And you can see, without even determining everything, you see that my arrow came and it coincides with this major trend line. So if this trend line is now being respected, you know that it's going to go up, and it's going to go up in a major way of 170 pips. And I'll give you the numbers right now, that we're looking at a TP of 173,700. If price does not break 171,600. Okay, so if you want to note that down, and you can say on, you know, what's his name? TB Joshua's thing, that you came and you saw a profit in Forex, and he showed you price in the future. Thank you, Jesus. Now, this is how we analyze the
Usual.
market. We want to be able to use our tools without the indicators lagging to distract us from what's going on. Because if you look at your RSI, you can see that your RSI is overbought. So people are selling and selling and selling, but it's extremely overbought. So you have to wait for market to correct itself in some way. So what you're now looking for is you're going to wait. You're going to wait for this structure over here, which we drew at 171,600. And if it doesn't break, if there's a doji or a reversal pattern that forms, you'll buy. And then you go to 173,700. And you will tell your friends that this is what you're doing. They'll tell you you're crazy. You won't go up that much. But this is what geometry does. It takes out your fear and it allows you to use simple mathematical equations to construct your analysis, and you let your trade ride. Remember, we caught our move from down here. This is where we caught our move, and we're still riding it. And everyone's saying, no, we'll sell here. I said, no, hold it. Everyone's saying, we'll sell here. I said, no, hold it. Because what you want to do is that you want to wait for trend to be able to be broken. And normally trends are broken from resistance. They're not broken from support. What did I say? Trends are broken from resistance and not from support. Why is that? Because what the trend will do is that when it comes to a resistance area like so, it will break this point. And then if we draw this properly, what it will then come and do is it will come and retest the area that it broke, which will look like to you a double top. But to us, we know that structure has been broken. So what you want to wait for now is that you want to wait for the three things I taught you earlier in the video, which are you want to wait for the highest high, and then you want to wait for a small dip that takes place afterwards. That is all the time I have to be able to cover this geometry. I just want to check something. Now, what we want to do is that we want to now the person who shouted out Euro and NZ. Are you happy with that? Take a screenshot, pose next to it. One or two things will happen if it continues to go up. Okay, if it continues to go up, this is the anchor point that you want it to go up to. If it starts to go down, then what you'll wait for is something like this. Okay, let it form a flag or something. Let it retest this area that it broke, and then you sell it down to this area. Okay, 169,200. So those are the two scenarios it can go, but you have to know to be patient and wait. Wait for what this structure is going to do. It's broken this area. Okay, when price recently breaks an area, it's a very hard chance for it to fall back down through that area to come back down again. What it's going to do, and the basic rule of thumb is that if there's no retest, there's no entry. Okay, so what it's done is it's broken here, it's coming back to retest where it broke. If it does retest it and it's holding, then you know to buy. Whether your RSI or your MACD says otherwise, I'm saying buy. Okay, if it breaks through here, then you want to wait for it to retest this structure because it's broken resistance, it's broken support, it will now become resistance. Then you'll sell it back down. This will allow you to be much more patient with your trading. Does that make sense? You break it down, you find that the reversal pattern that you've always been looking for, the one I just taught you. And then you want to be able to say, okay, I want to wait for the very highest high, and I want to wait for a low that happens right after it. That's when I'll enter. All right. So does anyone else have a currency pair that they want analyzed?
Euro CHF. Euro CHF.
Euro CHF. Okay.
Pound CSD.
Okay. Okay. So this is one of my charts. One of my charts that I drew a while ago. Hold on. So I do long-term structure. I looked at it from the daily, and you can see what's happening here. It's actually come to the point of it has to make a decision, but I think it will push up just a little bit. Anyway, I can delete this, and we have to see what price is doing. Okay. Now, what you want to be able to identify is a couple of things. If you're looking in a daily, you have to understand that price currently is in an uptrend. No doubt about it. No doubt about it. People try and anticipate to sell for it to meet the trend line, but you don't know when this point will end unless you're a master of Fibonacci or something. Okay, so you want to wait in an uptrend. You want to wait and buy the dips. In a downtrend, you want to sell at the peaks. Now, what we've seen over here is that it's been a long time, a very, very long time since this gap that took place when Switzerland left the EU. You know, markets dropped, and now it's been correcting ever since. Now, you see that this point over here has formed a high. It hasn't reached there in how long? Since 2014. So this is now the highest point that the Euro CHF has ever gone in 4 years. So you want to pay attention to that. Next thing you want to pay attention to is that there has to be a higher high. And this is this point here. Okay, we've broken it down now. You've seen that there's been a high that, you know, hasn't been reached in over 4 years, and then a higher high which has been broken. All right, so you want to pay attention to that. The next thing you want to pay attention to on the daily time frame is to wait for price to dip lower, like so. See, it'll probably meet with this trend line, because you see how aggressive it came down and it came aggressively up. Now, what you want to do is that you can do one of two things. You can draw an additional trend line, because you can see that there's even a trend within the trend that's happening over here. Bang. Okay. So if you want to see your confirmation dip will take place probably in this area before you can sell it down. And if this goes down, guess what? It's got a long way to fall. Where? A long way to fall. Maybe here. So like anything, you can give me 100 pairs, but the thing I'm going to ask you and tell you is that, what do you see that's happening in the market? What time frame are you in? And do you see the three things that I taught you? The Smurf and Swerve, the reversal pattern that will allow you not to trade with your emotions, but to use rationale. Is this a reversal pattern I can see? If I can't see it, I'm not going to trade it. That is how you're going to be disciplined with your trading. Now, if you can go into a lower time frame, that is fine. You've noticed that I only analyze in higher time frames. Stop this 15-minute nonsense. 15-minute nonsense when you get you 15-minute pips. Okay? You got a wife, you've got kids. Your wife and kids can't afford for you to always be on phone. So you have to spend time with them. Go on a higher time frame. Go on holiday. Do what it is that you love to do. Live your life. Allow structure to be able to form what it wants to form. And then when it gets to that point, you can just sell and leave it. Trust me, it's going to feel a whole lot better if you had maybe 0.10 even, or even let's say 0.50, or even a standard lot, and you sold from 1.19, and if price was able to hit 1.09, how many pips is that? It's 1,000 pips. Imagine selling that at one standard lot, 1.00. You will say, oh yeah, I'll be willing to wait a year for that to take place, because it's 1,000 pips.
That is blood money.
That is juju money right there.
That's all your money.
No malam can stop your flow. You know, so those are the things that you want to be able to look at. In a higher time frame, you catch higher pips. The risk is also there, but you're willing to wait a lot longer, and you can live your life. You don't want to be like me as a swipe master, having to be awake because 70,000 people are breathing down your neck, saying, oh yeah, I'm in drawdown, I'm in drawdown. Let the market do its thing. You know, I do my thing. After this, I have a meeting. Then I'm going to take my wifey out, wine and dine, spoil her. I won't look at the markets. If it hits stop loss, I'll blame you guys. All right. I'm joking. Now, does that make sense? I want you guys to smile and laugh. I don't want this to be one of those serious things where, you know, he came, he lectured us, and I didn't understand what he was saying.
I'm enjoying this.
Huh?
I said I'm enjoying this right from my...
Oh, you're enjoying. I'm glad you're enjoying. Huh? I thought you just had some eba and okra.
No.
That's why I thought you were young.
No.
It's all good. Okay, African at heart. Before I say anything, I just want to thank you guys for your time because I know time is valuable. I hope you guys have picked up nuggets. And what I want to do is I want to form a working relationship with you guys. I do plan on coming and going back to Ghana. I do plan on coming to see you guys and forming a relationship with you guys. So don't think this is the first and the last. That's not what I want. When I spoke to your leaders, I was like, no, I want to be able to put IML Africa on the map. I want to be able to usher in a new generation of trainers and educators so we can have the IML presentation in our local languages. So we can have our own IML educators. So we can have our own IML swipe traders. That is what I want. That's my heart for Africa.
Wow, that's interesting. I'm game.
Yes, yes. Drop me an offering. Now, let's go to another pair.
GU, please.
GJ.
GU.
GU,
GJ.
please. Yes.
Who should ask for GU?
I know people are calling GU because they saw my signal. So they want to critique me small. It's okay.
No, I've been on this trade and it's massive drawdown. So.
GJ.
Bounce USD for
Do you guys who uses swipe trades here?
we
We all
all use
do.
Okay, okay. So now when people are calling pairs that I've traded, they're judging me. I see.
We're not judging.
All
you.
right. So
Anyway.
I see the way I trade is this, and once you guys get to know the way I trade, you will know that, you know, Papa Smurf likes to just take it easy, let things form, because the longer you hold, the more rewarding it will seem. I knew before anyone knew, before someone told me not to buy, that this will happen. What happened? Let's have a look back and see what has happened. Me, I knew. You can call it juju, you can call it whatever, but I say I knew. You see that there's a low. You see that there is what? A lower low.
Okay.
And now what do you see over here? Hey, Papa Smoke Prophetic Conference 2018. You see that there's these three things that have happened already.
Yeah.
Now, what I did as well is that I decided to use my own rule and follow it, which was whatever happens once will surely happen again. Okay, so if we go back in time
Up and down now, I see.
and we see what GU has done in the past, then you'll see what GU can do in the future. So you copy this move, you see this move that's taken place, and if I copy the arrow, see how it's gone from impulse move, corrective move, and then you put another impulse move down, you'll be able to catch the majority of this move. All right, you see also here, you see how there's steady movements happening over here. So you see that's going up, you copy that, you put it at the end of the corrective structure, and look at that. Do you see how that movement is exact? You see how this movement also, this arrow over here, you put it at the end of corrective structure, which is over here because the confirmation dip is there. You see how it ends right at that structure. Now, something powerful has just taken place. Something very powerful has just taken place. Now, you see that there's this move between here and here, okay? But you have not seen the repeat of that move. Remember, I said whatever happens once will surely happen again, right? So you see 2 by 2, 2 by 2, 2 by 2. Then you see also over here my reversal pattern. You see there's the high, you see there's a higher high, and then you see what? You see the low, and it's come down, all right? When it came down, it formed a low, it formed a lower low, there was no confirmation. It just kept riding up, and then it formed another low before forming a confirmation. So what I just simply did was that I got my arrow and I projected well into the future because we live by faith, not by sight, right? And I saw this move. This is what I saw, irrespective of what's happening in the world, irrespective of if Donald Trump gets a haircut or not, or they cut prices of oil, you know, or, you know, whatever happens in the world, I see this move taking place because whatever happens once hasn't been repeated. So surely it should happen again. Now, if my analysis is correct, then that's good. That's great. Then you'll see something like this that might take place. If that takes place, what have you begun to see? You get your trend line, you connect the bottoms, and look at what you see over here. All the bottoms are connected. Why? Simple geometry. What you see once will surely happen again. So if this move has come up and you see no other move that has taken place, then surely this move has to happen again. All it will just take time. Time people are not patient with. This is why we are doing our job as swipe masters to be able to do that for you. All right. So we're looking at this and we're seeing that price is currently at what? 1.39600. That was my entry. And it came down small. That's okay. But we're now in blue. All right. If you look at your phone right now, you're in blue. Actually, someone look at their phone from my swipe trade. If you entered the details correctly, you should be in blue on that trade. All right. And so if we see that our take profit will be around this area, 14300, just say it just gets to there. That is how much? Isn't that like 240 pips? $240 pips. And what was the risk? The risk was only 50 pips. So it's almost a 1 to 5 ratio. So when you said that the stop loss is 50 pips, but you said the reward is much greater, look at what GBP NZ did. All right. And look what we have the potential to see what's happening. If something happens and news does its thing and we fail, hey, we fail. I didn't come saying I'll be perfect. I came to do what I came to do. But at least this will give you insight as to why I picked this pair to trade. And statistically speaking, if you go and do your own research, April is the month of GBP. GBP does wild things in April. So that's why I'm like, okay, I'll just go bullish all of April. Just GBP. Make that money. Now, what you'll begin to see is this. This has become now a consolidation area or a corrective move. Yeah. So I get my trend line, connect these two tops, boom. Price may range between these two areas before it makes up its mind as to what it's going to do. But at least we have that form of structure that is there. All right. So that is why GU is there. Now it looks like GBP CHF is about to trigger. So let's get in on that and see how we go. Like I said, GBP NZ is already up like 200 or so pips. So we're happy about that. So does that make sense as to why I took that trade and why I systematically broke down how I broke it down?
Yes, thank you.
You're very welcome. CHF. Okay, so any other pairs that we want to look at?
GBP, JPY.
I want to teach you a trick with JPY pairs. Yeah, I want to teach you something very, very quickly. Whenever you want to trade GBP yen, whenever you want to trade it, look at gold first. Look at gold first. Okay. If gold is strong, JPY will be strong.
Anything JPY.
Sorry?
Okay, continue, sir.
Yeah. So if gold is going to be strong, then the JPY will be strong. Just keep note of that, okay? Now, I'm going to put an example, and I'm going to compare this chart to our first JPY pair. Don't worry, I'll get back to yours, but we'll go USD JPY, and I'll show you something shocking. And I'll make this a line chart, so you'll know which is which. Okay, we'll make this yellow for the purpose of this presentation. And as you can see, if I zoom out, do you see something very interesting here? Okay, if you can't, I'll tell you. You see how this is USD JPY. You see how USD has been strong, going up, up like so? In return, you see gold has been going down. You see how USD JPY just went down, small. See how gold went up, small. You see how USD JPY just went up. See how gold just went down.
So they work opposite then?
They work opposite. That's the revelation. You've caught it. Now, what you can see already with this is that we've seen with this structure that there has been a low. Alrighty, there has been a low. You can see already with USD JPY, there's been a high. What else do you see that's forming? You see that the high has been broken. There's a higher high. So there's a chance that gold will come down small to form a new low, then quickly spike back up like this, come back, form a dip before going up. Why is this important to note? Because if we go to GBP, JPY, we need to see that there has to be some element of what? Structure. Now, what can we see? Let me delete this. What can we see in this structure? Well, for starters, already we've missed a move, which was this one. Low, lower, tiny confirmation over here, and it's been going up. But you can see that there's a bit of resistance that's taking place over here. Why? Because price did the same thing on the other end. There was a high, there was a higher high, and there was several confirmations to go to the downside. Now it's tricky because JPY is about to be strong, GBP is going to be strong, so you're going to get a lot of sideways movement. So you see already that this pair has been just going between these two ranges. So what you want to do is you want to be able to preempt what is going on. I'm more inclined to say that this pair will go down only because what happens once will surely happen again. You have not seen this move take place in this down move so far. So you want to use this as your resistance point. You want to see if price will be able to break that. If it can't break that, then guess what you're going to do? You're going to use this measurement. You're going to put it at pretty much the highest peak in that last move. And then you're going to anticipate the sell to the downside. Why? Because it appears, I'm only speculating, that this is a beginning of a downward move. I hope that makes sense. But you see how I broke that down? I first look for the reversal pattern. I look for other confluences like, okay, has this move happened once already? If there's a move that you cannot see in the market, don't try and force yourself to trade it. Ladies, when a guy is coming to you and he's like, oh baby, and you said no, isn't it annoying that he keeps pressuring you? Yeah. Treat the market like that. Do not force something you can't see. If she's not ready, she's not ready. Same thing with the markets. All right? So you've seen a move that's happened once. You've seen some form of corrective structure. So what you want to do is that you've seen some form of a high. You've seen that there's been a higher high. You want to wait for the confirmation dip and then sell it down to this area of 150, 100. And that move might happen very quickly. So make sure your pending orders and your stop losses are in place. Alrighty? Now, are there any final questions in regards to what I've taught this evening?
Evening, Australia. Morning, Africa.
What's your take on
Salutations,
gold?
that.
What's your take on gold?
What's my take on gold? It will go up. I just showed you using
USDJPY.
using the yen pairs. If yen is going to go down, okay, yen going down means you're investing in the Japanese yen. So if you're selling GJ, if you're selling UJ or any J, you're actually buying that currency, all right, because you're in favor of it going down and being stronger. So gold has the same tendency. It has already formed a low. It looks like it's going to form a lower low. Okay, if it has not formed a lower low already, then one of these has acted as the low that we might not have seen. All right. So what you want to do is, in order to protect yourself, one, do not trade gold on an account smaller than $1,000. Trust me, because if you see a move like this on your tiny account, bye account. Your account is gone. Okay. You see a move like this, bye. All right, no more for a month. You don't want to get in that. All right, so you want to make sure that you have enough capital to be able to withstand moves like that. Okay, now what you want to see is that you want to play this safe. Normally, if I want to get into gold or get into any pair, I sell a buy stop above the last high. See how this high came? So in order for me to see that there's actually some form of bullish momentum, this has to be invalidated. There has to be something that's higher than this to show me that there's strength in that pair for it to go up. Now, where is it going to go? That might be the question you want to ask. Now, long-term trajectory is this, okay? If I draw my trend line like so, you see that this is nice and steep, all right? We want to see what happened once will happen again. So we've seen already that, let me get my arrow. Let me use the trend line tool. All right, you've seen this move, make it green. All right, you've seen that once. Oops, I want to see the illustration. You've seen it happen again. All right, you've seen it once, it's happened again. Now, we've seen another move that's taken place in the market, which is this, pretty much this move. We've seen it once, you shall surely see it again.
See it again, I see.
See how I broke that down?
Yes.
All right. See it once, it will surely happen again. Look at this down move. I'm not sure if this will translate, but the markets normally happens in twos. Okay. Jesus said, go 2 by 2. Power of the two. You know what I'm saying? What happens once will surely happen again. What happens once will surely happen again. All right. So you've seen this move. This move hasn't been repeated yet. So we shall see it again.
So, because at the moment, gold is completely oversold since last week.
I don't believe in oversold and overbought.
That's what I want to ask. So we shouldn't put priority on oversold or overbought.
No.
If you think about market geometry, please leave the indicators.
No, here's the thing. As you grow, as you mature in trading, you will come to find that most indicators are validated for you to buy preemptively or for you to sell early.
Yeah.
So you're going to say that, oh, it's overbought and oversold, so I'm going to get in. That's not how it works. The banks have designed it so that you get in, so they will stop you out. I guarantee this area was overbought. So what did the banks do? Okay, let's spike it up and blow everybody's account, and then we can write it down. So be careful of this overbought and oversold stuff. And let me ask you quickly and tell everybody, what does RSI stand for?
Relative Strength Index.
Relative Strength Index, good. So it's not a relative overbought and oversold syndrome. It's measuring strength, which presupposes that if price passes a point where it's technically overbought, that should indicate to you that that price is strong. Does that make sense?
Yes.
If it's penetrating past the 70, you don't want to sell against that because it's broken an area that people are saying that once it goes here, it should reverse. So what happens if it goes past that point? It's too strong. It will keep going. And there will be examples in your chart, depending on how you use your RSI, to be able to illustrate that. Me personally, the way I use RSIs, and I can do a course on it as well. You see something like this. What period do you use? We can go over this quickly. 14, 13, 12, 21?
7.
7, okay. I don't know why 7, but this is something that you want to pay attention to, all right?
Okay. Because I do small time frames, 15 minutes. That's why I use 7.
Yeah, if you do small time frames, you should do larger RSIs.
Yes, like 88, I normally do all 23 or 18.
All right.
Yeah.
Do you see how pretty much the highest point on this RSI was around 77? Okay, highest point, highest point, highest point. Do you see when it broke that, it came back down and broke it again, price shot up? This would have been a point in your chart where you would have sold. Guarantee it, because the RSI said so, yeah? So let's see. If we had sold here, what would have happened?
I would have gone back up.
Yeah, okay. Okay, that was a mistake. Let's go to this one. What happens if we would have sold here?
Without loss.
It will have trapped you in, trap your money in. You'll be negative.
Right. Yeah.
You see what I mean? And this is where people come up with a theory of, hey, Forex is a scam. They told me to use this indicator, it works. But every time I use it, it doesn't work. So twice already, it has been overbought, but price keeps going up. You know, even the third time when it was overbought at this area, what they decided to do is that if you saw that it was overbought, most people will be like, I'm going to wait for a confirmation. Yeah. So you wait, and you say, oh, it's gone lower. Let's zoom in and see what happens here. You say, oh, I want it to go lower. So you go in at this doji here, and you see that price spiked up before coming down. So 3 occasions where it shows that it's overbought, and 3 times you would have been stopped out. Remember what I said, that they would have used this point and it would have been overbought? I said, I guarantee this area is overbought. Look at this. You would have sold here and you would have cried. Bang, bang, bang. You would have spiked. You would have lost, blown your account. And then it would have come down. And then the other times where you see it respects this so-called overbought and oversold, price moves nicely. But those are times where you're not in the market. They do it on purpose. They know. This point. This point indicates that this area would have been an area where you would have bought. Because indicator said so. And look what happened here. Do you see what I mean? So that's why I abolished the idea of the RSI. Now, the only reason why I would use the RSI is to measure the strength of the character. And this is how I measure the strength, just real quick before I go. I know you guys don't want me to go, but I promised. You guys gave me an extra half an hour. I don't want to be like an African Pentecostal pastor. No, no, no. So I cannot afford. I'll make this higher, maybe even a 21 or a 34. Okay, those are Fibonacci numbers. All right. Now, what you can use in this is using things like divergences or waiting for breakouts. So in this example here, let me get rid of everything. In this example here, you see that there's a high and you see continuous highs that are happening in the market. So what you can do is you can use your trend line and connect this high, and draw all the way down. And then you can say that once the RSI breaks through this trend line, I'll buy. Because it has broken an area that hasn't been broken for a long time. All right. Why does my methodology work? Let's do it the other way around and I'll show you. Look what happened here, connecting low points. Here, low, all the way through. At an area where price was broken, this is where you would have got in. See how, actually, no, that's a bit thing. Maybe here. This is where you would have got in after you saw a break in this little support structure that you drew on your RSI. You would have got in here and you could have written it all the way down. Okay, so that is how I could use the RSI. That's how I've used the RSI in the past. I don't wait for it to say, oh, it's hit 70, so therefore I'm going to sell. It's a lie from the pit of hell. Me, I'm telling you, the web analyzer and all that might tell you otherwise. And the web analyzer is cool because it's fast adrenaline. It's quick money pumping. But sometimes the web analyzer doesn't detect when certain things happen in the market. It won't detect when a bomb goes off in Korea. It won't detect when Donald Trump says A, B, C, D. So you got to be careful when your indicator tells you to do something that you follow. Okay, it's not every prophecy that you will follow. Go eat dirt and then walk around the mountain 7 times and then clap and then go naked and run around the marketplace and you'll be healed. Who would follow that? No one would follow that. It's the same way you should treat your indicator. Use what's happening in the chart first. Get some confirmation. Get some things that are happening to confirm your reversal, and then look at your indicator and say, okay, what is this indicator now suggesting? Is it in line with what I'm already thinking? If it is, then go for it. But do not say it is oversold or overbought. So now I'm going to readjust my mind to think that it's time for me to buy or sell. Because that's how they get people, and that's how you'll be wicked out. That makes sense?
Yes, thank you.
I hope it did. All right, not a problem. All right, so look, I'm going to hand it back. I know it was fun. It's probably one of my most fun because I'm with my own, so you can say things and joke around and do things that you wouldn't do with other calls. So I appreciate you guys for being on the call. It's time for me to go. I've just got the signal that look, the meeting, they're texting me. I said I don't care. I'm with my people. So we'll touch base. I just want to thank you guys so much. Keep me in your prayers because being on swipe trades is not easy, especially when you have a winning one and a losing one, and people are throwing stones when you lose, but they never praise you when you win. So I need all the upliftment I can get. God truly bless you, and I hope that we see each other in the not so distant future.
Thank you. Come again soon.
Thank you very much.
Thank you, Papa.
Thank you very much.
Oh, if you guys can drop some love maybe on Facebook for those who want to know my real identity, just see your leaders. They'll tell you who I am, and tag me if you learned something. People need to know that Africans have got Forex in the bag. All right. God bless you. See you later.
Thank you. Thank you very much. In the house, you have people from Ghana with you here.
Thank you.
Abdul is from Ghana, and Abdul Pasmok is a Ghanaian. That's your brother. We have UK full house. We have Nigeria. We have Cameroonians in the call. Thank you for the time you spent with us today. I'm very sure we are going to meet again very soon. Very soon. And you are coming to Nigeria. Will be a wonderful thing. We are going to conclude plans on that. Thank you very much, bro.
I think it's gone.
Okay. So let's continue. Lagos Traders, what do you have for us?
Not finished. He has gone, but I still continue.
Lagos Traders, what do you have for us? What's the chart? We still have 27 minutes to the end of this session.
Loaded. Child.
Are you ready? Can we check on the trades we are holding? Lagos, are you ready? Do we have so what trades are we holding at hand? I think we are in pounds USD, we are in Euro USD, we are in can you drop the chat room? What trades are we holding at hand?
GU, pounds
GU.
USD.
Yeah.
And there's EU as well, even though I didn't take it yesterday, but there's EU.
Yeah, EU is already up. EU is still at the buy zone. It has given us 1, 2. We have gotten this. We still need the third one. Okay, this is 1, 2, and 3. I think we are set. 1, 2, and 3. So I think we are still in the buy zone. So those that did not enter, it's time to go. For those that are holding, it's okay. I believe you have, if you have exceeded your maximum risk, if you have exceeded your maximum risk, let's go again. If you did not exceed your maximum risk, we have 44 pips risk here. Let's help those that are. Let's help those that are that were not in before now.
If you have the numbers for stop loss and TP.
They are here on screen.
Huh?
For what? On which page?
EU, Euro USD. Okay.
Can't you see the screen?
All right. Okay.
Is there on screen? Are you seeing? I want to know.
I can see it. I can see.
Okay. So for those that did not exceed their risk for the day, you still have room for more risk. We have 44 pips there. So go calculate your risk. Go calculate your risk. Where do we go? Go calculate your risk. Let's do that together. 44 pips. 44 pips stop loss, USD 44 pips. 44 Euro USD. Where is it? Euro USD 44 pips, 0.04 for 1,000. 0.04 for 1,000. If you are risk, check your risk. If you have exhausted your risk limit for the day, needless going in, you still have room. I've heard people are taking the trade already. So now it's 0.04 for $1,000. 0.04 for $1,000. Right for Euro USD. We are still in the yellow box. The yellow box gives us an entry. We have a press conference today. Is it today? Press conference. Please confirm the calendar. Tomorrow, Thursday. Okay, thank you. Okay, let's check which other pair. We were waiting for USD CHF yesterday. We did not enter. Let's check today if it's ready. Not ready yet. Not ready yet. Not ready yet.
How about EN, EURNZD?
Euro New Zealand, okay. Yeah, we decided to go pending order because it wasn't ready. We are still watching for this, the break of this zone. The break of this zone is what we just discussed now. We are expecting a retest of that level. That's what we are expecting, either a retest or a break back in. So whatever happens, we are still we are outside the yellow box for now. So it requires either a pending or you wait totally for, I think this top order should be below this now. From what we see, or you just wait. Let's not go in there. It's not ready. It's not ready for now. Which order pay? Pounds JPY, we should be looking for entry soon. Let's check. I think it may still move up to give us a 3. Let's take this for 1. Let's take this for 1. It's not yet 2. We should be able to get this. So let's be patient about the entry here, except a stop order. Except a stop order. Or conservatively, we can do this. Conservatively, we can do this. Whatever comes out from here, then we can go. But otherwise, that we can. What Papa Smurf just taught us now is the last course at the IML Academy called Market Geometry. When you are done with the basics, intermediate, advanced, done with harmonics as a course, the last course you will take market geometry. With market geometry, you will not be comfortable at any time with nothing will take you to again, please. I've been preaching this. I'm not comfortable with indicators. Indicators should only be for you, and indicators, you only use them for confirmations if necessary, but you should be independent enough to be able to see the market yourself while the indicator is also doing its own research. All indicators follow price, and the market is between the institutional traders and the retail traders. The institutional traders, their main task is to play on our own IQ. They play on our intelligence. They create things that makes us feel looks real and just to take some part of our money. So always try to see the market clearly. So I would recommend you go and redo the market geometry course. Go and redo the market geometry course. I remember Mr. Christian talked about shift in momentum. Shift in momentum should be in advanced or intermediate. Shift in momentum is very, very necessary. Go and check that course, shift in momentum. You will understand what he meant by 1, 2, 3. So whatever it is, for pounds JPY, the JPYs, I think they have their news on Friday night, Thursday night against Friday. Okay, so maybe we may have entrance JPYs by tomorrow or before the end of the day, by New York. So for now, I'm still the same thing here. You see, we've gotten one. If this is another high, that will be 2. We may have the third one at the entry here. So let's watch out for this. It's not ready. It's not ready. It's not ready. What do we have? Let's check the web analyzer. What does it have for us? Web analyzer, what do you have for us? So our pounds USD is still on. We have not closed it. We are going for a longer time, I believe so. So if you did not join us, you can still join us. For those that were in, when you see pullbacks, it's an opportunity for us to enter. What does this guy say for now? USD card 5 minutes, USD CHF. USD CHF is still confirming here. Let's check it. I'll check the pounds USD later. For those that did not join us since when did we enter it? Tuesday. Since Tuesday, the Monday or Tuesday, we got into this trade. Let's check the USD CHF. What does it have for us from here? It's called for a sell from what price? 9821. So let's confirm that 9828. 9821. Where are you? So whatever happens, we could actually have something break this based on what we just discussed now. This is the previous high. We may have this tested or broken or break and we get in back. The false breakout, whatever happens, this is the region we should be watching out for now. So we can actually be waiting for the harmonic scanner to get our entries. After identifying the previous level, we can actually wait for confirmations. Confirmations for entry is not yet out. It's not yet out. That's USD CHF. We just ensure that you have it in your list for trading for this week. We may have entry this weekend or before weekend. We may, whatever comes up, we will do. If it doesn't come up, we will not do otherwise. That's where we are. And if you remember, this is the same place that dollar index is. Same place that dollar index is when we checked it yesterday. Same place. And now so let's watch on USD. Where's the noise from? Where's the noise from? Please mute that microphone. Mute that mic that is copying the noise. microphone. Okay, yeah. Okay. Okay, so pounds USD daily. We have seen that we have been on this trend since that's how it has been for a while. The bullish is daily charts. We've been bullish, we've been bullish, we've been bullish. I think we started it 216.10 October. So we have been forming higher highs, higher lows. And whatever happened, if we take this swing high to this swing low to this swing high, we are at a particular percentage of retracement. Particular percentage of retracement.
And our stop loss is still intact, so that's fine.
Yeah, the stop loss is very, very strong.
Mm.
So we are about we found a price action formation at 61.8, confirming we are good to go. So I think we have a good setup here. What was our stop loss here? What's the stop loss we had on pounds USD? We were using a previous low. I think this low, we subtracted 10 pips from here. That should be 398 something. 388 stop loss? 39 or 388 something.
39090.
Okay. So we are good with this. So let's hold that. For those that did not join, you can still take it, calculate your Papa Smurf gave us a buy stop after we entered the first one. What is that? Is stop loss? Okay, let's take our own 39. Current market price to the stop loss 39 or 39.
3909, yes.
Okay, that's 41 pips. 41 pips rigs. 41 pips rigs. Anything between 41 or 50 is still okay. So with 41 pips rigs, we can 41 pounds USD, 41. GBP USD, 41. GBP USD, 41 pips rigs. 0.5, is that true? Oh, I'm wrong, 41. Yeah. Okay, 0.04, 2% risk of $1,000. 0.04, for those that were not there, we have 41 pips risk for now. Remember our take profits were based on the Fibonacci. What did we do to get our take profits? We did this. We used the harmonic scanner strategy. We use this to determine our take profit. So take profit 1 was 38.2. Take profit 1 was 38.2. Take profit 2 was 61.8. These are for short-term traders. Take profit 3 by harmonics will be here. Papa Smurf has given us where is his own take profit? Who wrote it down? Pounds USD. Sorry?
1.4090.
Yeah, 1.4090. So it's far up, not close by. So this is according to the our harmonic scanner. For now, we can manage this until it breaks out of here. Then we go for that. So how I can have maybe 2 or 3 positions with well calculated risk. I'll take profits accordingly. When it breaks out, I keep going. It will not go on a straight line. It will keep giving us new entries As it's driving towards the destination, it will keep retracing to give entries. So each highs, each lows are possible entries and exit positions. I think someone asked a question yesterday. How do we take close positions even without the take profit being hit? I take my profits whenever we get a new high form. When you have a new high form, I take profit expecting a pullback for me to have a new entry at another low form. So each highs, each lows gives you information. So even if the destination is not, you will still have exits and entries along the line. If you enter without exiting at all, you will not be making cash. If you enter, exit, depending on your personality, you make cash. If you are a position trader, you don't need to exit. Open the trade and forget. Go, what did Smurf says? He said, go out, go have your life, live with your family, go have your life, travel, go for holidays. That is how trading should have been. So we'll try to end of this session. Do we have anything from the trade house? 9 minutes to the end of this session. We just check the trades running. Do we have anything new? Bonjour. Hey, Asus. Merci. Merci. Been a while, we don't have you here, but I'm happy to have you, sir. Okay, Lagos, are you there? Abdul, that was your brother from Ghana, staying in Australia. We are going to bring him home. We have to bring him home, bro. Okay, I think we can end the session for today. See you tomorrow, Thursday, at the next session. So trade houses, continue with your activities for the day. Continue with your activities for the day. Look for entries on the JPYs and make some money. At least we have a direction. Every pullback, every correctional move is giving room for entries for the next impulsive move. Go back to IML Academy. Please go back to Academy. You have the market geometry. If you did not complete the market geometry or you completed it, go and repeat market geometry. Lift above indicators. Lift above indicators. The original design is not for us. The original design is to play and exploit us. The original design is to exploit the retail traders. The retail traders and the institutional traders are not in the same fellowship. So their fellowship is trying to run down our own fellowship, but we would not accept it. So see you tomorrow at the next trader session. We will have more of past Smurf. We will have more educators with us, more swipe masters with us. As time, always, our trade house session will always be adding more value every day. That is the bell. When the bell rings, go check, there'll be some money for you. So if you are a scalper, you develop your skills very well. At least the test we did here in Abuja, I did not see any scalper. So people were actually playing against their personality. If you go against your personality, you will never be a successful trader. If you trade against your personality, you will see Forex as scam. If you trade against your personality, you will never forgive that your old age auntie or uncle from the village. You will always suspect he or she is the cause of your problem. Unknown to you that you are yet to trade according to your personality. So let's end for today. See you tomorrow, 10 a.m. trade house session, connected to only trade houses across. Thank you,
Can we have
Lagos.
the recordings, please, of Papa Smurf?
We will have it. So Lagos traders, thank you. United Kingdom, I think I saw Ireland. Thank you, Ghana. Thank you, Cameroon. Merci. Bien, okay, don't worry. Okay. Anything, take on from Nigeria, we try. So, see you tomorrow, Lagos. See you tomorrow. We have to meet later. Oh, we are meeting immediately after this for the summit. Summit is coming. Invite big. Invite big. The two vice presidents of Imarketslive are coming to Africa for the first time, and they are coming. Invite big. Invite big. Please ensure you invite very big. We are meeting at Lagos on the 12th of May.